Today, we are going to unpack one of the biggest, fastest, and frankly, most audacious crypto plays of the year. It's the story of a Wall Street legend going all in on Ethereum, and you are not going to believe the details. So, get a load of this number, 833,000 ETH. That's not just a big number. That's nearly 1% of all the Ethereum out there. And if that wasn't wild enough, all of it was scooped up in just 27 days. The speed is just insane. It's a full-on buying blitz that has the entire market scratching its head. So you have to be asking, who is the whale behind this massive splash? Well, meet Tom Lee. He's a legendary Wall Street analyst, and now he's the chairman of a new public company called BitMine. He's the guy making a multi-billion-dollar bet that he's caught lightning in a bottle for the second time. Now, if this whole situation is giving you a serious case of déjà vu, you're not wrong, because Tom Lee himself is basically screaming from the rooftops that he's seen this movie before. He's convinced that Ethereum today is in the exact same spot Bitcoin was in 2017, right before it went completely parabolic. So the big question is he right again? Let's just rewind the tape for a second. Picture this, it's 2017. Tom Lee is pretty much the only guy in a suit on Wall Street telling everyone to take Bitcoin seriously. By 2018, his big institutional clients literally thought he'd lost his mind and started firing his firm. But then, fast forward to 2021, his crazy calls suddenly looks like genius and he's the one laughing. And today, he's pounding the table saying the exact same thing is happening right now, just with Ethereum. And think about that. It wasn't just that they disagreed with him. He was seen as a professional liability. He admits his reputation was actually damaged, being laughed out of the room only to be proven right. Well, that makes his conviction on Ethereum today so much more interesting, doesn't it? He's not afraid to be the lone wolf, especially when he thinks he's about to cash in again. So, how is he playing it this time? Is it just more of the same? Nope. The strategy is way more sophisticated than just buying and holding on for dear life. This is an active income-generating machine he's building. And here's the secret sauce. A Bitcoin treasury, like what MicroStrategy does, is simple. They just buy and hold. It's like gold in a vault. But Ethereum is different. Because it runs on proof of stake, BitMine can stake its ETH, which means they can buy, hold, and earn a nice little yield of over 3%. This staking reward is a superpower. It turns a static pile of crypto into a money-making machine that's working 24/7. And this superpower, this ability to earn income, leads to this really cool financial concept called the MNAV premium. All that really means is that their stock can actually trade for more than the raw value of the ETH they're holding. And that premium? That's the rocket fuel behind this insane buying spree. Now, according to Lee, this isn't just market hype. He breaks it down into 4 layers. First, you've got the basic value of the ETH itself, right? Simple enough. Then you layer on that sweet staking yield we just talked about. Third, and this one is wild, is a premium for pure speed. They are buying ETH 12 times faster than MicroStrategy ever did. And finally, you get a little bump for liquidity because it's a super popular stock to trade. Okay, so they're buying at warp speed, they've got this financial rocket fuel, but where is this all going? What's the actual end game here? Well, it's all driving towards one almost unbelievably massive goal, 5%. And let me be perfectly clear, that's not 5% of their portfolio. The goal is to own 5% of all the Ethereum in existence. To give you an idea of how insane that is, think about MicroStrategy. It took them 5 years of nonstop buying just to get to about 3.2% of Bitcoin. Tom Lee's plan is to completely smash that record and do it in a fraction of the time. The endgame here is what Lee calls a sovereign put. Now, that sounds complicated, but the idea is actually pretty simple and kind of genius. The goal is to become so big, so essential to the Ethereum network, which he thinks is the future of Wall Street, that BitMine itself becomes a strategic asset. So if a country or a huge bank wants to get a massive, compliant position in ETH, they won't go to an exchange. They'll have to come knocking on his door. Okay, but this brings us to the big mystery, the elephant in the room. If there's all this institutional buying pressure, why isn't the price going to the moon? It's the question every single ETH holder is asking right now. I mean, we're talking billions of dollars pouring into the market in just a few weeks. So how is the price still just stuck under $4,000? With all this buying, who on earth is doing all the selling? Well, Tom Lee's answer is pretty blunt. He thinks the market is completely asleep at the wheel. He believes we're in what he calls a step function moment. That means the price isn't going to slowly grind up. Instead, one day, bam, it's just going to suddenly jump to a completely new level. He says it's just like Bitcoin in 2017. The institutional tidal wave is already here, but the price just hasn't gotten the memo yet. And he is not shy about naming his numbers. Just for ETH to catch up to its old valuation against Bitcoin, he sees a near-term target of $7,000. And his target for the end of the year? A stunning $15,000. So it all comes back to this, right? We've got the Wall Street veteran they all called crazy. The guy who got fired by his own clients for being right. And now he's back making an even bigger, even bolder bet. But hold on. If you thought 15 grand was bold, his ultimate thesis is on another planet entirely. He actually argues the upside for Ethereum is even higher than Bitcoin's ever was, and he literally floats the idea of a 100x return. He's not just bullish, he's suggesting Ethereum could one day leave Bitcoin in the dust. Just let that sink in for a second. A 100x gain. That would put Ethereum's market cap in the tens of trillions of dollars. It's a number that sounds absolutely absurd until you remember who's saying it. He's made the absurd call before, and he watched it come true. The parallels are just undeniable. You've got the brilliant contrarian investor. You've got the misunderstood asset about to hit the big leagues. And you've got the chorus of skeptics saying it'll never work. The script feels pretty familiar, doesn't it? The only question is, how does this movie end?